Okay, now that we have a pretty good understanding of the physical flow, and as again, I want to emphasize, while this implies synchronism of these various actions that are going on physically, the job order costing system is tracking the costs as they occur. So when that material actually hits the receiving dock and is accepted by the receiving associate, that person will typically either electronically, depending upon the type of system that you have at your facility, or on paper, fill out a receiving report saying that I received this item, 100 widgets, purchase order number XYZ from this particular company, and I've received it. That information is sent to accounting so that accounting now knows we have a purchase order, we have received the material. As soon as the invoice comes in, I will match all three documents together. That's called a three-way match. Not necessarily that important to you at this point. And then I will write my check and pay my bill. That receiving report is also going to feed another document that unfortunately is not discussed in your text. But most firms will have what is called a material ledger. That material ledger will represent there is a separate material ledger for every component part of raw material that you carry. So for example, let's just assume that there's 100 different things in this iPhone. I mean, there's buttons and there's a camera and there's some sheet metal and there's some resistors and diodes, there's a touch screen. Let's just say there's 100 different components and that's the only thing we made. Well, then there would be 100 material ledgers, one for each one of these part numbers, that would, in essence, attempt to maintain how many do you have on hand, how many did you receive, how many did you issue, and what is the balance. And there'd be one of these for every single solitary component part that you keep in materials inventory. So for example, at my last firm, we had 3,500 unique raw material part numbers, 3,500. And we had, well, it was a computer system, it wasn't certainly by hand, we had 3,500 unique material ledgers that would tell us what the level of inventory was on hand at any one point in time for each one of those 3,500 parts. Now, those parts will sit in raw material inventory until there is a need to then build something. And as I mentioned earlier during the physical flow, someone from production control will likely issue what is called a material requisition for a job. And that material requisition will say, I want to build X number of these. And based on that, you need to pull the number of parts necessary to make X number of these. So the physical person will go then and pull all those parts off the shelf. And then at that point, that material requisition will define the total number of component parts. So for example, if there's 5 part A's in this product and I'm making 100 of them, then I'm going to pull 500 parts in order to make 100 of these. So that material requirements for the job is going to feed a job order cost summary sheet, which is described in your text. This job order or job cost summary sheet is going to be the central document that's going to accumulate all the costs associated with building this job number XYZ, that's building 100 of these. So that material requisition then becomes the document that provides the objective evidence and the direct traceable material that went into this job. So the amount of cost that went into that job is going to be equal to all of the parts necessary to make 100 of these. Now, Mary and Joe and all of the people out on the production floor are now going to begin converting this raw material to the product. They're going to be filling out a time card at the end of every day or doing it electronically, and however that data is collected, if it's collected. And that direct labor, based on Mary works 5 hours on this job and she gets paid $15 an hour, so $75 goes into the job. I work 5 hours on the job, I'm paid $12 an hour. Why is that? Oh well, I'll have to talk to my boss about that. 5 times 12 is $60, and that gets added to the cost of the job. So the job is is summarizing all of the material, all of the labor that is going into that particular job. The last component is we need to get overhead into the job. Now, I'm not going to get into that right now. We're going to get into that a little bit later in this chapter. But suffice to say, the factory overhead associated with building these 100 will now be added to the job cost summary sheet. And when then this job is done, the total value of this job cost summary sheet is going to be transferred from work in process into the finished goods inventory location, where we will have in finished goods, guess what? Just like we have a material ledger for every raw material part, we have a finished goods ledger for every finished product that we sell. You might have 5 of these, 10 of these, 20 of these, 50 of these. It depends on how many things you make. If you make computers, you might have 5 or 6 different models. You might have different display screens or whatever the case may be. But what gets transferred into that finished goods location is the value of that job cost summary sheet. Remember, this is what is called normal costing, which is all of the material, all of the labor, and the overhead that's being applied to this product. So the job cost summary, the job order cost system accumulates and captures all of your costs as the product and the labor and the overhead is moving through the manufacturing process. And again, not synchronously, it's a little asynchronous, but for all practical purpose, I'm trying to just advise you that this job order cost system is capturing the cost of that product.